Good morning, everyone. Welcome to the 24/7. My name is Niharika Valia, and I am with you with the area of uh, JAIIB. I hope I am audible as well as visible. Okay, so I'm continuing with the area of company accounts further. Okay, so let's talk about it in detail. Comes the first question. Reserve capital is not a part of authorized capital, subscribed capital, unsubscribed capital, or issued share capital. If we talk about reserve capital now, reserve capital refers to the capital which is basically kept for the future. That means when the company will die, only then we will call these people to pay the money. That is called liquidation of a company. Liquidation reserve capital is not a part of authorized, subscribed, unsubscribed, or issued share capital. If we talk about reserve capital, it is a part of authorized capital, because ultimately you cannot get capital which is not a part of your reserve capital. Authorized capital. Authorized is the capital which is the capital which we have taken permission for without taking sorry till the time we did not take the permission from ROC. How can we work? Sorry. Then that is what we define as authorized capital. So authorized capital, reserve is a part of it in any case. If people haven't subscribed, we cannot keep that capital by the end and ask people for money. So subscribed is also a part there. Then issued means if people have taken up this capital, only then it became subscribed now. So it was authorized, it was issued, and also subscribed. But this amount is something that we are not calling people to pay me right away. We are saying that wait now. That is called unsubscribed capital. The capital which is basically something where we are where the amount is something that is not taken up yet, right? If this amount is not taken up yet, we cannot ask this amount at the time of liquidation at all. At the time of need, how can we ask them? So in this case, the correct answer is unsubscribed capital. Right? Here comes the next question, everyone. Which of the following is not a part of the finance cost? Bank charges, interest paid on debentures, interest paid on public deposits, or loss or issue of debentures. Now, if we talk about this part, see, finance cost means the cost which is incurred in order to raise money. Whenever I would like to raise money, then I have to pay now. Finance cost is that cost. That includes bank charges, interest paid on debentures, public deposits or debentures, loss on issue of debentures. If I talk about the finance cost, which is not a part of finance cost, interest paid on debentures, whenever I want to raise money, I have to pay interest. This is a part of finance cost. If I have a public deposit, this is also a part of finance cost. Debentures is also a part of finance cost. Which is not a part of finance cost is bank charges. Bank charges is basically that is incurred in order to maintain the bank account. Nothing else is happening now. So bank charges is a part of it. Then subheadings are non-current liabilities are subheadings of non-current liabilities are long-term provisions, long-term borrowing, deferred tax liabilities, or all of the options. Go ahead, everyone. Please go ahead and answer. Subheadings of non-current liabilities are long-term provisions, long-term borrowing, deferred tax liabilities, or all of the options. If I talk about the non-current liabilities includes long-term provisions. It includes long-term borrowings as well as deferred tax. Deferred tax liabilities are basically liabilities which are arising, I'm sorry, because of two things. Number one is the tax difference that is coming up because of Companies Act 2013 as well as the Income Tax Act 1961. So all of the options are a part of the non-current liabilities. Next question. Negative net working capital implies. If we see there's a negative working capital, how do we define working capital? It is CA minus CL, right? The question says we have CA minus CL is equal to working capital. When it is negative, that means, think about it, our current liabilities are way more than the current assets that we are having. That means in order to pay off our current liabilities, we will use our non-current assets, right? We will use our fixed assets or non-current assets just to pay off these current liabilities. This means the organization is having major financial issues. If you have to pay your short-term loans by giving away your long-term funds, isn't it alarming? That means the long-term funds have been used for fixed assets, short-term funds have been used for fixed assets, long-term funds have been used for current assets, or short-term funds have been used for current assets. The negative net working capital would mean that we are not doing the things properly. How do we deal with this? What we'll do is the long-term funds have been used for the current assets in this case, which is not a good sign. In this case, this shows that the organization is not being vigilant about their things. Right? Next point. This trial balance is created after adjusting journal entries that have been recorded. Adjusted trial balance, unadjusted post-closing or pre-closing. See, first of all, we prepare journal, then we prepare ledger, then we prepare the trial balance. That's the concept, correct? If we talk about this, first of all, you prepare the journal, then you prepare the ledger, and then you prepare the trial balance. Once we're preparing all these things, how do we look forward to it? Adjusted trial balance, unadjusted, pre or post. Once we are done with all the entries which we are supposed to record, then what will happen? Once we are done with all that, what we create is adjusted trial balance. This has got everything. This is the trial balance which becomes the base for the next level of financial statements. So this is very important area to work upon in the accounting cycle. Next question. What is the use in preparing trial balance? What is used? If I am preparing a trial balance, are we using the specialized journals? Are we using the balance sheet, ledger, or general journal? See, first of all, we prepare the journal. So yes, we are using the journal, but then we prepare the ledger as well. So after preparing the ledger, we prepare the trial balance. In this case, the point would be ledgers. The balances that we get in the ledger would be taken up towards the area of trial balance. So what is used in preparing trial balance? We use the ledger account balances. We don't use the ledger accounts itself. We are using the balance that is stated in the ledger account. Next question. Which of the following account with normal balance is shown on the debit side of trial balance? Which of the following account with normal balance is shown at the debit side of trial balance? Credit account, unearned income account, rent income, or cash account? Which of the following account with normal balance? See, credit account will normally have credit balance because it's a liability and liabilities are ideally having credit balances. Unearned income account is basically the income that is basically that's a part of my organization there, but unearned, if I receive the money in advance and it's not earned yet, it's again a credit balance because this is a liability. If I receive money in advance from you, it's a credit balance now. Then we have rent income account. Rent income is basically my income. Incomes are always having a credit account. So basically these three elements are credit. And the question is asking about which particular side will be shown on the debit side. So the answer is credit account, unearned income account, rent income, or cash account. The correct answer is cash. Cash can never be negative. I can never say you I have minus 20 rupees in my pocket. Either I'll have 0 or either I'll have 100. There would never be a point where it would be negative. So that means the correct answer is cash account. Next question. When the current assets are subtracted from the current liabilities, it will be equal to capital, net income, working capital, or goodwill. When the current assets are subtracted. When the current assets are subtracted from current liabilities, that is CA minus CL. The formula is for working capital. So capital is basically the money that we invest in the business. Net income is the total income that we earn, right? Income, for example, net sales. Sales minus sales return is net income. Goodwill is basically the reputation of the organization, which is an intangible asset. In this case, the answer would be CA minus CL. When current assets are subtracted from current liabilities, we get the working capital. Okay, next question. The next question says, which statement is true related to hybrid or mixed system? This system, okay, there are three systems. The number one system, if I talk about the systems there, first is cash system, where everything is recorded only in terms of cash or money. Then the system is called accrual system. Under accrual system, what do we do? Under accrual system, we have we record everything which is on due basis, and this next one is on hybrid. Hybrid is basically the mixture of both of these. But hybrid would mean all the expenses and liabilities would be recorded on the basis of due basis, because as a business we are always scared. If we are supposed to pay to someone, we will record it right away. If we have to receive money from someone, they say wait till we have something called cash basis. The moment we receive money only, then we'll record and celebrate about it. But if I have to pay to someone, just note it down, pay them off, and then get free from it. So in this case, revenue and assets are recorded on cash basis. Then revenue and assets are recorded on accrual basis. Expenses and liabilities are recorded on cash basis, or none of the above. Revenue, the point would be revenue and assets are recorded on cash basis. The moment I receive the money only, then we'll record. But expenses and liabilities are recorded on, this is recorded on due basis. Sorry, this would be recorded on due basis, while this would be recorded on cash basis. So in this case, the correct answer is revenue and assets are to be recorded as soon as you get the money. Till the time you don't get money, you will not record it. That's the rule. Balance sheet date, the balance on the accumulated provision or for depreciation account is simply deducted from the assets in the balance sheet, transferred to P&L, transferred to asset account, or transferred to depreciation account. The balance sheet date, the balance on the accumulated provision for depreciation account is simply deducted, or we are looking forward towards the area of profit and loss account, transferred to asset account, or depreciation. Balance sheet date is 31st of March. By the end of the year, we are going to put it. But the balance on accumulated provision, whatever accumulated provision for depreciation is, normally it is first shown in the P&L, and after showing it in the profit and loss account, we'll be taking it towards the area of balance sheet. We'll show it in the balance sheet as well. Balance sheet, it would be deducted from the asset. So in this case, the correct answer is simply deduct from the asset in the balance sheet. If it is, sorry, if it is given in the trial balance, we would deduct it from the balance sheet. If it is given outside, first of all, show it in the P&L as an expense and then show it in the balance sheet, asset minus depreciation. Next point, sales invoices are first entered in cash book, purchase journal, sales journal or sales account. Sales invoices, that means when we are making sales, where is it recorded first? First of all, if we are preparing subsidy books, it will go into the sales book, or also called sales day book. If we are making what? If we are making sales invoices are first entered in. Where are we entering it first? We will first record it in the sales journal. Then we will take it to the, okay, it will include the credit sales taken to sales day book. Then we have cash sales taken to sales, cash sales is shown in cash book. Whatever the combined amount will be taken in the sales account. This is the procedure. Might look a little difficult. Credit sales are a part of sales day book. Cash sales are shown in the cash book because we receive cash from it, and combined cash and credit sales will be a part of sales account. Right? Now comes the next question. Okay, this is where the session ends, but have you reviewed our courses yet? If you haven't, then this is the perfect time because the double validity is going on. What do we need to do right now? Okay, you need to go to our organization's website, that is www.adda247.com. Once you go on to the area of www.adda247.com, there you will get all the details regarding the JAIIB. But you are also looking forward towards the CIP examination as well, because it's always better that you plan for both the examinations together. Because once you are in the studying phase now, you can give the papers back to back. That's one of the basic things about studying there. So if you're preparing for JIB and also looking forward to your CIB, why not look forward towards it together? You can take up our JIB and CIB Mahapack. Currently, Mahapack is having 81% discount along with double validity. That means if you're trying to purchase it right away, you will get double validity. You need it for 1 year, then this is for the JIB ka Mahapack. Let me tell you about JIB and CIB ka Mahapack. This Mahapack is for 2 years, number 1. You will get over 1100 hours of classes, 72 total test series, 389 videos and 96 ebooks. Along with this, what is the basic reason you need to take up this particular Mahapack? Because here you are not only getting the classes, but mock test series, video solutions, revision batches, ebooks, numerical batches, case studies. That means one particular Mahapack that you're purchasing, you will get everything, not only for JIB but also for CIB, not only for English medium but also for bilingual. That means one Mahapack worth every single penny. What you need to do is, you need to go onto the area of JIB and CIB ka Mahapack. All you can do is click on the area of buy now, use the code Y541 and apply it. As soon as you'll apply it, as you can see, it will cost you 10,799. To be very precise about the calculation, if the amount is 10,799 and it is for 2 years, that means it is for 24 months. The cost per month would be 450 rupees. So that means it is less than most of the, even I would say it is less than the amount that we spend on our basic necessities, even stationery. Right? So when we're looking forward to it, 450 rupees per month is definitely something that you can look forward to. This is the least cost that we are providing right now. So at this point of time, if you go through the app, you'll get an 81% discount. And what you can do is you can check it out in our website or in our app for further details. So you can use the code Y541 and get it at 10,799.20. Okay, and if you're looking forward towards only the JIB, for that even we have a specific course. What you need to do is you need to go to the area of JIP, I'm sorry, JIB Kamaha pack, where we have got 600 hours of classes, 52 test series, 94 videos, and 55 ebooks. But here the validity is for a particular year, 6 months validity, doubled there. What you can do is you can check it out in our website or in our app for further details. Both English medium as well as the bilingual batch would be opened up for you. You can use the code by